Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Brian from Santiment. And folks, you all know we're going to cover crypto metrics. We're going to do a deep dive on Bitcoin, XRP, and altcoins to give you the lay of the land and what's happening using data. Brian, great to see you.
Good to see you, Tony. We're back after I think 3 weeks off here together, but I'm excited to talk about lots of different price changes. The party has at least temporarily come to an end, and I think that's changed the outlook from a lot of the retail traders out there.
Absolutely. And we saw incredible price run-ups for Bitcoin and many altcoins. And now we're having that pullback cool down phase. So we want to look at the data to see what's happening. What was your first thought or impression of Bitcoin cracking $100,000?
Yeah, I think because of my time spent at Santiment, my first thought was honestly, this is really cool. It's super historic. Now, how greedy is the crowd going to get, right? Because once they start to show euphoria and a lot of FOMO, that's usually when the party comes to an end. So we saw a little bit of that, which I'll show in the graphs here in a moment, but it wasn't to an extreme degree, not like we saw in like 2017 or 2021. So now that we've fallen back down, now my opposite question is the crowd getting too scared? And if so, we can be bouncing right back up because prices move the opposite direction of crowd's expectations.
Absolutely. So how about you show us the charts and we can start at looking at the sentiment around when Bitcoin hit 100K and what it is now with this pullback.
Let's do it. All right, so just looking at the past week here. So the obvious story that pops out is prices definitely corrected. Bitcoin's actually about right where it was a week ago, actually up about 0.5%, believe it or not, because we had that early dip last week where we got to the low 94Ks. Almost the exact same thing happened this week. We got to like 94.3, 94.4. Currently, at the time of this recording, we've actually bounced a little bit back just shy of 96K. But most assets, especially the ones that have been really partying hard, a lot of those OG large caps like XRP and Cardano here, they're both down about 20%. Stellar, another one. These were kind of the big three that a lot of people were noticing during those like 5x, 6x breakouts that each of them had throughout November. So call it regression to the mean, but a lot of those same assets that were doing really well are now kind of letting the math be the math and coming back down a little more than the rest of the altcoin pack at this time.
Yeah, that makes sense. Some of these had incredible run-ups and uh, really mini parabolic run-ups where you might see something like that near the top, but we're not near the top, based on different metrics. And this pullback, I think, is very healthy, very necessary for us to continue to go to higher prices. So I know there's a big leverage flush out. And are you seeing some fear in the market, with this significant pullback?
Yeah, so we can talk about that a little bit. I pulled up this chart, which I find pretty fascinating. It's measuring the amount of mentions of buy, buying, or bought with the combination of Bitcoin or BTC in it. So naturally, you would think when greed is starting to get really prevalent, these bars are going to go up. When it's starting to go down, the bars go down. And that's essentially what we've been seeing. We kind of peaked, if you know, don't include the Trump pump that was going on in mid-November, where everyone was just very euphoric and got rewarded for that euphoria. We eventually hit this point here where on December 5th, people were enthusiastic about buying the dip. They got like a mini bounce right here that got them excited. And then you can see how the buy calls for Bitcoin, as well, by the way, as Ethereum and meme coins, which are here in red and yellow respectively, they're all kind of shrinking down now after really getting high during this dip in late November, one more hurrah in late December. And it looks like we're kind of at the most fearful point that we've been at for about a month now.
It's funny, as smart investors, they look for fear and blood on the streets to buy. That's the time they're not tweeting about it, but they're actually doing it. But the real retail crowd will tweet out about buying when the price is pumping, which
Right.
is the wrong time. It's so
Exactly.
funny.
It's funny how quiet the crowd is in terms of buying when the price is at 50 or 60K, like it was, what, 3 months ago. And then how vocal they are when it's at 100K. You always scratch your head and you go, why didn't you say that before you could have doubled your money? So
Hmm.
it's fascinating, the psychology of crypto, and even advanced traders and, people who look at charts all day like you and I won't speak for you, but for me, like even I have that natural inclination to go like, oh, prices have been going up now, therefore they're more likely to continue going up, as opposed to expecting prices to go up when we're on that huge downswing, especially when it's been going on for so long, like back in 2022, right before the FTX collapse and all that stuff came out.
Mm. Yeah, and it took me years to unlearn that herd mentality, watching financial news and to look at the charts
Yeah.
and to do the opposite of the herd. And was it challenging? Of course, but I've been rewarded for doing that. Buying the blood, buying the fear. So come December 2022, I was buying Bitcoin at
Mhm.
16, 17K, and early January 2023. So I say that not to boast, but to help others understand this is investing. It's not running with the herd. They're usually coming in with that dumb money crowd, which
Yeah.
I didn't make that term up, but it is what it is.
Congrats, by the way. That's incredible that you were one of the few that was buying during that time. Uh, but I was going to say, the blood in the streets saying, that Warren Buffett kind of made famous in the traditional equities markets. There's a reason for that, especially in crypto. There's a reason why people who buy when there's blood in the streets tend to get rewarded. For one, there's the simple math explanation where what goes down usually goes up, what goes up usually goes down, and crypto is obviously here to stay. Anyone who doesn't believe that, who's watching this video, um, watch a few videos and read a few books, and I guarantee you'll find something that eventually changes your mind on that. But when you do see a lot of blood in the streets, right? The vocal majority, they're not the whales. Those are the retail traders who are selling off, running around like chickens with their heads cut off, explaining that Bitcoin's dead and you should believe them and follow their lead and all this. Well, who's buying those coins, right? They're not just disappearing. When they're selling them, they're going into the large wallets, which might be exchange wallets, yes, but it's also a lot of whales that just have these huge limit buys that are being fired off because of all the small retail wallets that are selling off their fractions of coins, hundreds or thousands or tens of thousands at a time, and making the whale wallets richer. And then the whales, when necessary, use uh, their heavy hands and heavy bags to push prices up further and punish all of the people who are capitulating. And that's kind of the psychology behind it, and the real explanation as to why prices typically move the opposite direction of the crowd's beliefs at any time.
Absolutely. So speaking of whales, could we take a look at what whales are doing as far as accumulation and even supply and exchanges and so forth?
Totally. So one of my favorite charts that I think we almost always go over on this call is just the overall collective holdings of any wallets that are 10 BTC or greater. It's obviously a very widespread way of looking at uh, the supply distribution of Bitcoin, but it gives you a good understanding between all the exchange addresses and all the real, sharks and whales out there that are accumulating or dumping at any time. Getting an idea of what they're doing and how much it correlates with prices. It's pretty fascinating, and it's always been the case. And you can see, especially right around November 4th, this was literally the 24-hour period that Trump had been elected right here. And you can see how they really just started accumulating aggressively right as
Mm.
that news broke. Now, it is slowing down a little bit. In fact, when I refreshed this like 10 hours ago, I was actually seeing the first downtick in about 2 months since like October 14th. That would be the last time we saw an actual like drop, like way back here, 10th or so. So now
Mm.
we're up here. It's up again, meaning that as of today, this current 24-hour cycle, there's actually started to be a little more accumulation once again. Perhaps prices going below 95K was enough to get whales and sharks interested again. But regardless, we're not quite seeing the same level of accumulation. It's just flattening out a tiny bit. So if you're worried that we're about to see a huge collapse, one thing that kind of validates that that probably won't happen is when the whale wallets continue to go up collectively.
Yeah, and that makes sense because we saw a lot of long-term holders were selling Bitcoin at near 100,000, and then of course you cross 100,000, you touch 103. There's going to be some folks who are selling, whether it's traders or whoever else. And I think they were showing some wallets that have been around for 8 to 10 years, right? People have been holding, they haven't moved it,
Yeah.
and there was some distribution there, so it makes sense. But to your point, with this pullback, many of these whales could start buying the dip, so to speak, and holding for maybe the final leg of this bull market.
Yeah, you touched on literally the next point I wanted to make, and that is exactly how the dormant, older, stagnant coins are looking right now. And this is an extremely good vote of confidence because this line here, that I'll make a little more prominent here in orange, it indicates the average age in which coins have been sitting in their wallets. It's called mean dollar invested age. Santiment's been using it for about 4 or 5 years now. And basically, the theory that's been back tested and proven time and time again is that when this line moves down and coins get younger, it's indicative of older, large shark and whale wallets moving their stagnant coins back into circulation, thus creating more network activity and allowing a bull market to essentially to allow it to come to fruition and continue. And we've
Mm.
seen over history, if I go back to like 2016, we'll go back 8 years here. In every bull cycle, I know these green bars representing the price are small way back here, but you can see how the mean dollar invested age way back in 2016 started to move down and continued all the way until the bull market was just ending here in mid-December 2017. And then all of a
Mm.
sudden you see it start to rise. This rise indicates that the stagnant coins are becoming more and more stagnant again. And then we see the price doing this and going down over time until we see another bull market, mini one right here in May 2019, and then another one in uh, late 2020 as COVID was really starting to invoke a ton of fear in the markets. And then we kind of went on this long stagnant cycle here until October, November of 2023. And ever since then, you can see how the price has exploded. If I hold down shift and I just go to the right, you can see on the top left side of my screen, the 10 plus BTC wallets since mid October of last year have accumulated 325,000 Bitcoin. And the mean dollar invested age has dropped just about 198 days on average, meaning during this bull market stretch, if you want to call this 14-month cycle a stretch of bullish momentum, which I think you should, um, the decrease or the age in which coins have been sitting in their wallets has decreased by almost 1/3, which is just a
Mm.
ton and helps validate that we are still in a bull cycle long term.
This is such an interesting metric. I need to get this chart from you to bookmark it because
Definitely, I will.
yeah,
I'll
this
send
is
it over.
very telling. You just see it from the macro, and what's happening now with regards to supply and exchanges. Are you continuing to see that decline as well?
Yeah, it's looked pretty good. I'll zoom in a little bit here just to the last 3 months. But overall, it's business as usual. Bitcoin just continuing over time to move off of known exchange wallets and into cold storage, which is more a good thing than a bad thing. The bad argument is that if they're sitting around for a long time, they can't circulate, and it tends to create stagnation. Whereas if they're on exchanges, it implies that there's going to be a little more network movement. But overall, the reason it's good is because when there are less coins on exchanges, there is a decreased chance of future mass sell offs, especially by whales, who make up a very large chunk of this supply on exchanges, as you would imagine. So it's
Mm.
continuing to move down. If we go back to around, let's just go exactly 3 months ago, the supply on exchanges has dropped by about 1.4%, which is great. And on top of that, the Tether and USD coin supplies on exchanges, the top two stable coins in crypto by market cap, they're continuing to rise. USDC is kind of being a little choppy right now, but you can see Tether in red here. Since just November 4th, the night before Trump was elected, um, it was it was sitting at 25.35 billion on supply of coins on exchanges, and now it's at about 40.79 billion. And this, by the way, is supply held by top exchange addresses. So for stablecoins, we're specifically looking at just the 10 largest wallets and how much they're holding. So you can see just what a massive increase it's been for the Tether and USD coin top exchange wallets.
Mm. So I'm assuming as soon as we start to see an uptick, a V-shaped recovery, if you want to call that, Brian, we got to start sounding the alarms a bit, right?
Yeah, I think that as long as the dry powder is going up here with
Hmm.
top exchange addresses just holding more and more stable coins, it's indicative of the buying power clearly being ready to shoot us right back above 100K. And
Mm.
the limited sell power right now from Bitcoin is only going to strengthen that argument. So yeah, I'm with you.
Wow, this is why I love the data, man. No feelings, no emotions. Is happening? What are the whales doing? It really tells the clear story of where we're at and what we can anticipate. Um, Now let's talk about XRP because we've been seeing incredible price movement. I don't know what's going on this cycle, but there is a ton of retail interest. You look at Google Trends, I'm seeing XRP being mentioned on random YouTube channels they're not crypto specific. So there's a lot of retail hype here.
Yeah, it's funny what a crazy 30-day run will do. Even after this little retrace here we've seen, it's still up about 329% in the past month. From its top, roughly about 8 days ago, the price is down about 15.5%. But um, just between November 25th to December 2nd, call it about a week, give or take a day or two, um, it went up more than double just in this one little stretch here. And you can see how the top really was precisely called by the amount of transaction volume here. And we can even see how it's matched. Let me make sure these are 1-day candles here. It's matched by the high spike in daily active addresses and circulation. This wasn't necessarily like this massive warning sign. I think we all can agree that XRP, just like any other altcoin, is still going to be at the whim of Bitcoin being able to stay stable itself. And
Hmm.
this is, of course, when Bitcoin started dropping also. But XRP's utility was showing just tons and tons of FOMO signs. So there's a difference between like a gradual level of growth, like we saw back here, and then just a sharp, like reactionary spike from all the FOMOers who are suddenly moving XRP as a result of just the price instead of the fundamental opportunities that XRP provides that other altcoins don't.
Interesting. Um, and another coin that was really going nuts was Dogecoin as well. I think it was early November, if I'm not mistaken, or I don't remember the timeline. But Dogecoin was really rallying hard.
Yep.
And the same thing, you had a lot of retail being drawn in because of its price movement.
Yeah, I mean, there were a few reasons. Meme coin mania was going nuts as Bitcoin's price was beginning to climb. And every time there was a big step up or a new milestone made from Bitcoin, a lot of that profit redistribution went straight into meme coins. And of course, Doge being the king of the memes, in terms of market cap, at least, it benefited greatly, especially after Trump was elected. As you
Mhm.
remember, Mr. Elon Musk is a big Dogecoin fan. At least he memes about it a lot and talks about it a lot. So with him having his presidential candidate win the election, I think a lot of people had increased confidence, not just in crypto, but specifically in anything that Musk has been promoting over the last couple of years. And Dogecoin was one of the biggest beneficiaries of the election result, going from, what was it, about, yeah, 15 cents here in early November to around 32 cents in late November. Obviously, it's been followed by many other meme coins that have done great as well. I've seen some 5x and 10x returns from meme coins we had never heard of before just during the month of November. So Doge was kind of just a representation of the meme coin euphoria and how crazy it had been. And you can see, just like with XRP, a big spike in circulation signaled the top here in November 11th, and then it settles down. We get a rebound, and then daily active addresses goes off, and then we kind of see the last top that we ended up seeing. So look for any more utility spikes here as a clear sign that the FOMO is starting to become a bit too much. But as of now, it looks pretty healthy again. So I think Doge and the rest of the meme coin uh, options out there are waiting for Bitcoin to just pick up steam once again so it can get rolling again itself.
It's so interesting how cyclical this is. And to your point, this all follows Bitcoin, right? And I often tell people about that. Watch what Bitcoin's doing and use it as a measuring stick to get an idea where we're at and where we're going. So if Bitcoin's going to do its next leg up, a lot of that liquidity will eventually be rotated to altcoins, and then you got the stablecoin supply is going to hit some of these altcoins as well.
Exactly. Yeah. Bitcoin, just like it was doing 15 years ago, it always starts the lead and then other coins will follow. There are occasional short term exceptions, but if you're, regardless of whether you like or hate Bitcoin, and maybe you're only into altcoins, you should still be watching Bitcoin for its signal to allow the rest of the markets to flourish the way they've been doing throughout most of this year.
Absolutely. I see you have here funding rates, and I know there
Yeah,
was a bunch of liquidations yesterday.
exactly. Yeah. So funding rates are kind of a, a sentiment measurement, at least the way I like to perceive it. It's the way people are really putting their money where their mouths are. So they may talk bullish or bearish about Doge or any other coin on any given day, but this is showing their true level of interest in going long or going short, and how many margin or leverage positions are being opened on any given day. And especially over the past week or so prior to today, we were seeing quite a bit of greed toward Dogecoin in the ratio of longs compared to shorts. When there's more shorts, that's when you'll see these little red lines over here. And that's
Mm,
usually an indication that short liquidations could occur and cause prices to move up. The opposite happens when you see huge long ratios compared to shorts, and then the price moves down thereafter. Uh, Essentially, funding rates are always trying to get back down to even. If it's too high, that means that longs are literally paying shorts a premium so that they can benefit from prices moving up and up and up more. But that premium causes the ability for the price to move up more in a more difficult manner.
mm,
So essentially, this is one of the primary reasons that you can benefit from going against the crowd. If there's
mm.
blood in the streets and they're literally trying to bet against Dogecoin, optimal time to buy. If they're betting in huge droves in favor of Dogecoin, it's at the very least a more advantageous time to take some profit than usual. I'll leave it at that.
Are you seeing the same type of pattern for Bitcoin and XRP?
Yeah, let's take a look at both really quick. They are fairly similar, give or
Mm,
take. You know, any 8 hour period might be slightly different. XRP is actually seeing more current longs than Doge. So people are still quite confident, especially on BitMEX, which is quite interesting here. Just
Hmm,
huge longs, more than we've seen throughout most of the year. Going back to March is the last time we saw this high level of longs compared to shorts. And Binance is not quite as extreme, but yeah, they're both pretty long right now. And then switching to Bitcoin, Bitcoin's a little more on the neutral side because I think personally there's a little more rationality uh, for Bitcoin because it's not going up 500% in any given month. It's more just
okay.
a steady, 10, 20, 30% in a given month. Therefore, the longs don't get quite as extreme. But
Hmm,
yeah, on BitMEX, right at the top, you can see it was really starting to get high. Let me make sure it's refreshed here. Yeah, BitMEX really high on the fourth and fifth, really, and then Binance right around the same time. And then it actually went up a little bit more and then just fell off. And now we're kind of back at neutral. But yeah,
interesting.
XRP seems to be the one that's still getting quite a bit of um, undeniable, FOMO. I don't care that the prices are going down. I'm still going to long. I'm just going to buy the dip more and more. And that can get people in trouble sometimes.
Yeah, and I noticed some folks are looking to short XRP. I see a lot of people looking to do that,
Well,
and
at
which I
least
get.
I,
Yeah.
I was just going to say, according to the data, there isn't enough evidence that that's making up the majority of people. So maybe it's
Mm.
a small minority of people saying that, but the data shows people are still overwhelmingly long toward XRP.
Oh yeah, so that's what I meant. Like,
Yeah,
because they notice that the herd is so bullish and long, they're like, I'm gonna short this thing after that
right.
parabolic.
Yeah. Well,
Um,
it's interesting because they sometimes they're going to say it, but they're just trying to manipulate the crowd a little bit when they
yeah.
say things that they intend to do but don't actually do it. That's one of the really fun things about checking out, what they're saying versus what's actually happening on exchanges.
Yeah, absolutely. Brian, let's wrap it up
Yeah,
around
yeah,
the total altcoin market cap. If you can give us a view of that and what's happening there from maybe a sentiment standpoint.
yeah. So if we look at just the overall numbers right now, the market cap among the 3,600 assets or so that we have is down about 1.5% in the past week, but volume is actually up. So
Hmm.
this volatility that we're seeing is certainly causing more activity than we saw even during the crazy all-time highs of last week, going from late November to early December. And I find that fascinating. So there is definitely some interest in dip buying. And the other thing I can show is actually, this chart too is just a quick representation of the amount of positive versus negative comments here in green versus red that I'm going back and forth on with my mouse across social media. And then this gold line indicates the ratio of those two metrics, positive versus negative, multiplied by the amount of discussions. So, in short, when it's really high, that's an indication of FOMO. You can see just while I'm highlighting this, there's a big spike right at the top here, big spike kind of at the top here. Yes, it trickled up a little bit more. And then this was a top as well. So you
Hmm.
don't want to see, arbitrarily anything above this line. That would be an indication that we're seeing too much FOMO. At the same time, you do want to see a lot of sentiment below this line. Right now, we're smack dab in the middle and nobody quite knows what to think. And it's just causing bulls and bears to kind of have friction, and the panic sellers are getting scooped up by the dip buyers, and it's kind of just havoc at the moment. But I think eventually the crowd is going to start leaning one way or another. If we see anything below 94, which seems to be the support level right now, that's when you can start to expect lines like these, which would be a very good indication that it's time to truly dip buy and go against the crowd.
Interesting. It's interesting that we're stuck in that limbo or right in the middle, and I know a lot of people are thinking, hey, we may rally into Christmas, into the new year, or maybe it dips down and then the rally
Mhm.
continues in January. We'll have to wait and see.
Yeah, and I'll say for what it's worth, in 2017 and 2021, we actually had some rough Decembers. I'm not going to say that that's exactly what will be the case this time, but taxes are a thing in most areas of the world. And when we have such crazy good performance years, there has been a bit of a letdown for the last month, sometimes 2 months of the year. I know this November was huge, but don't be shocked if there's a little bit of trepidation and whales and sharks kind of go on cruise control a little bit for the next few weeks, where Bitcoin might and crypto might actually become a little bit boring for once. And suddenly in January, February, that's where we might start to see fireworks in either direction once again. But holidays kind of tend to pull back the amount of volume as we get toward the second half of December, and profit taking for tax purposes can be a thing. So I'd be in the very short term, I'd be aware of that phenomenon and how prior huge years like we saw in 17 and 21 had that uh, result, and it could happen again.
Hmm. Great advice, great insights. Brian, thank you so much. And we'll have to do this, I think. I know the holidays are coming up, but we got to touch base before Christmas to see what this market is doing.
Yeah.
Maybe it goes up, maybe it goes down. We'll have to wait and see.
I'd love to, man. Yeah, I'm looking forward to catching up in 1 to 2 weeks, and we look back at just how, the very end of this year is going to shape the markets. I think it's going to be kind of chaotic and just strong opinions in both directions. But, it's always fun looking at the data with you, and I appreciate the time as always.